Hello, people. A very happy evening to all of you. So, guys, we're doing this chapter on valuation of inventory, and particularly we were discussing the concept of reconciliation of the inventory, right? So, all of you said that, sir, question 4 is quite tough, and indeed, this is one of the most haunted question of this particular chapter. So, let's have a look at this question, guys. It says that the physical verification of the stock in a business was done on 23rd June 2020. The value of the stock was rupees 48 lakh. So now, guys, what has happened here is that normally the physical verification of the inventory takes place at the end of the financial year. The financial year is April to March, then 31st of March or 1st of April, you're supposed to carry out your physical verification of the stock, which is also called as stock audit. If you're following the financial year Jan to December, then 31st of December or 1st of January is ideally the period where the physical verification of the stock needs to be done. So here in this question, they're saying that due to some reason on 30 June, they could not do the physical verification of the stock. They could not do the physical verification of the stock on 30 June. So here, this is 30 June. Maybe the financial year end is ending on 30th June. Or maybe they are doing, let's suppose, the quarterly, audit. So quarterly, for example, all the listed companies are supposed to submit their financials quarterly. So for listed companies, the audit is done on quarterly basis. So first quarter is what? April, May, June, ending June. So let's suppose this is April, May, June. So on 30th of June, 2020, the physical verification of the stock was supposed to take place. Due to some reason, the stock verification could not happen on 30 June. It was happened earlier than this. That is 23rd of June. 23rd of June 2020, the physical verification of the stock has taken place. So as on that date, the value of the closing stock is rupees 48 lakh. Now, with this 48 lakh, you need to add certain things and subtract certain things in such a way that you will land up to the inventory value as on 30th of June. So when we started our discussion on the valuation of inventories, I had discussed about I had discussed about what is forward reconciliation and the backward reconciliation. So far, all the questions that we have done is all backward reconciliation. So this is the first question that we're dealing with, the forward reconciliation. So with this 48 lakh, guys, you need to add certain things. You know what? Between this period to this period, all the goods that has come inside the premises, basically the inward of the stock, which could be because of purchase or it could be because of sales return. So the inward goods needs to be added. All the goods that has come inward due to purchase or due to sales return needs to be added. And with this, you need to minus all the outward goods, which means outward means because of sales or purchase return. When I do the sales from my godown, the goods go out of the business. If I do a purchase return from the godown, the goods goes out. So you have to minus all this in such a way that you will arrive at the inventory value on 30 June 2020. Right? Now, you need to identify. So from the given question, guys, you need to identify those parts or those segment, which is, inward movement of the stock and which are all the outward movement of the stock. Okay. So let's read through the remaining question. Here they're telling that out of the goods sent on consignment, goods at cost worth 2,40,000 were unsold. So here, in the valuation of inventory topic, they are touching base the concept of consignment also. Okay. Purchase of rupees 4 lakh were made, out of which goods worth 1,60,000 were delivered on 5th of July 2020. Okay. Sales were 13,60,000, which includes goods worth 320 sent on approval. Your SOGRA concept is also included here. Sale of goods on return or approval basis. This is also included. Wonderful. So valuation of inventory tested, consignment tested, sale of goods on return or approval basis tested. Half of these goods were returned before 30 June. Half of the goods were returned, which came back to your godown. Remaining half, no information. Goods are sold at cost plus 25%. The profit on cost is 25%. Then what will be profit on sale? 20%. Excellent. This we have done ample times. So all of you know how to calculate this. However, goods costing rupees 2,40,000 had been sold for rupees 1,20,000 rupees. Goods costing 240 is sold for 120. Oh. Profit or loss? Profit. Wonderful. Okay, loss. Determine the value of the stock on 30 June 2020. How do you find it? Do you find googly balls? So can we deal it one by one? Heading, please, all of you note it down. Statement showing value of inventory on 30th June. As on 30th June, this could be the inventory, or forward reconciliation statement as on 30th June. This could be the heading. So please note down the heading. Format, particulars, amount column, amount column. Then I'll tell you what to do. Anything you can follow. You write both. I would prefer this in the exam. Done? It's a pretty easy question, but the language, in which they have given seems to be confusing. But never mind. We'll, decode all the questions, all the segments one by one. Note down, guys, value of the closing stock as on 23rd June 2018 is 48 lakh. This inventory value we have derived after the physical verification of the stock. Guys, in the beginning, when we started our discussion on reconciliation, I had clearly discussed it. I've clearly put the points how the inventory verification has been conducted, how the forward reconciliation, backward reconciliation happens. All that has been seen. So I hope all of you are thorough with that. Conceptually, everything has been discussed. So we're just applying those part in this particular question. Now, the question here says that out of the goods sent on consignment, goods at cost were 2,40,000 were unsold. Now, this line is there, no? Out of the goods sent on consignment. This is what is creating a lot of confusion to the people. The question that arises is that these goods were sent when? If you look at the before line, it says that the following transaction took place between 23rd June and 30th June. Between this period, the following transaction has taken place. So it is normally a tendency that anybody reads, after this line, if anybody reads this line, the tendency is that, sir, between 23rd June to 30th June, there are certain goods that were sent on consignment. Out of that, 2,40,000 were unsold. This is one way of interpreting this question. This is where, now, if the question is interpreted this way, then what will happen? There will be no treatment for this 240. You know why? Okay, I'll tell you what is interpretation again. Normally, the interpretation of the student. I'm telling you there are two interpretations for this particular question. I'm telling about what interpretation out of the goods sent on consignment. This line, people interpret that the goods were sent between 23rd June to 30th June. Out of that, goods were 240 were unsold. So we've learned in the consignment concept that if any goods that is unsold lying with the consignee, that is our stock. So we need to include that in our stock. Now my question to all of you, if your assumption is that these goods were sent on consignment between this period, 240. So can I say, when you were taking the inventory verification on 23rd June, this 48 lakh had the 2,40,000 worth of goods? Because after that only the goods were sent. If you are assuming that these goods were sent on consignment after 23rd June, then this 48 lakh includes 2,40,000. So from this 48 lakh, outward of 2.4 lakh, I need to minus. Then till 30th of June, the goods were not sold by the consignee. So their stock is our stock. Their stock is our stock. So physically on 30th June, the inventory 2.4 lakh will not be in our premises. But we have to add that, right? So we'll add 2.4 lakh because their inventory is our inventory. So can I say minus 2.4 lakh plus 2.4 lakh, no impact? Correct? This is the right solution if the assumption is that the goods are sent between this period, when 23rd June to 30th June. But when ICAI has solved this question, they have not taken this assumption. The assumption what they have taken is that these goods were 240 were sent long back. Out of that, 2,40,000 worth of goods We have sent some X value of goods. Out of that 2,40,000 worth of goods, between this period, that is on 30th June, they said that the goods are not sold. Are you clear? The first assumption is that what we took, which is not taken by ICAI, what assumption we took? Immediately after this line, when we read this line, the assumption what we took was that these goods, not we means normally student. So these goods were sent in between this period. So when the goods were sent in between this period, when the goods went out, 2.4 lakh is supposed to minus. And since the goods were not sold till the year end, their goods is our goods. So therefore we have to add it back. In that case, there is no impact. But this assumption ICAI has not taken. The assumption that the ICAI has taken is that out of the goods sent on consignment, which means the goods sent on consignment earlier. Now, had they used the word earlier, the confusion would not have been there. Had they mentioned it, out of the goods sent on consignment earlier, goods at cost were 240 were unsold. If this earlier one would have been given, no, then there wouldn't have been any confusion for the people. Now, let's do the assumption what ICAI is taken. ICAI is saying that these goods were sent on consignment long back. So on 23rd June, when I was taking the physical verification of the stock, these goods were not there in my godown. Am I right? So this 48 lakh does not include 2.4 lakh. When I was doing the physical verification on 23rd June, these goods were not in my inventory. These were already sent to the consignee. So when I did the physical verification, these stock were not in my goods. So 48 lakh ke under, there is no 2.4 lakh. Inside 48 lakh, there is no 2.4 lakh. And the question says that these goods were unsold till the 30th June period. So can I say the stock with the consignee is our stock? So therefore, we need to add 2.4 lakh rupees. So with 48 lakh, add 2.4 lakh rupees. Minus 2.4 lakh, I will not do because these goods were sent well before I took the physical verification on 23rd June. So this 48 lakh does not have the 2.4 lakh worth of goods that were sent because it was sent somewhere earlier here. The goods were sent somewhere earlier here. So therefore, no need to minus 2.4 lakh as we did in the first assumption. Am I clear? That's the reason I say what they've done is add unsold stock of out of goods sent on consignment 2,40,000 because consignee's inventories are inventory as per the consignment concept. So 2,40,000 is added. Any problem here? Please tell me, guys. Any problem here?
No, sir.
Is the logic clear? So here the assumption what they have taken is the goods is sent on consignment before the physical verification. So this is one place where people go wrong in their assumption. Now, second part is saying, the second part of the question says that purchases 4 lakh were made out of which goods worth 1,60,000 were delivered on 5th of July 2020. What are they trying to tell? Sir, 4 lakh worth of goods you purchased. Out of that, 1,60,000 worth of goods were delivered 5th of July, which means next quarter after 30th June. Now here what people say is, what people think is that, sir, out of 4 lakh, 1.6 lakh worth of goods were delivered the next period, which means what happened to the balance? What is the balance? What happened to balance 2.4? The balance 2.4 is delivered within the period. So had I done the physical verification of the stock on 30th June, this 2.4 I will add. So what people say, sir, this 48 lakh is the stock on 23rd June. And from 23rd June to 30th June, 2.4 lakh worth of goods have come in. So add that as your purchase, add that as your stock. So people will add 2.4 lakh. And what they will do is, they would leave apart this 1.6 lakh saying that, sir, had you done the physical verification on 30th of June, this inventory would not have included this 1.6 lakh. Therefore, we are not supposed to add. If you remember when we did the backward reconciliation, in certain question, the question had stated the policy of recording the purchase, the policy of recording the sale. For example, the first question what we did. Here, if you observe, they said that sale are recorded in the book when they are dispatched. Sale is recorded when they are dispatched. And purchases is entered when the invoice is received. So sale is linked with delivery. Sale is linked with delivery, which means if delivery happens, sale. No delivery means no sale. But for purchase, this is not the rule. For the purchase, they're telling that if I receive the invoice, I'll record the purchase. Receipt of the goods is immaterial. Like that, the policy is being stated. Here, like that, any policy is being stated. Here, is there any policy that is being stated? No policy is being stated. So here, the assumption that they have taken is that sale and the purchases will be recorded based on the invoice, or purchases, at least here they have taken the assumption that it will be recorded based on the invoice. Physical entry of the stock is not material. And moreover, if you look at the final answer, they did not ask the physical value of the stock on 30th June. They are asking the book value of the stock on 30th June. One second. They're asking book value of the stock on 30th June. I know it is pricking because the assumptions are varying here and there. I understand. But I'm telling you how they have solved this particular question, keeping what all into mind. So now, guys, out of 4 lakh, 2.4 lakh you have to add, no doubt, because purchases happened. Remaining 1.6 lakh, what they're telling is that still that is our stock, and that stock is in transit. The stock is in transit, so that becomes our stock. So what they're doing here is that they're adding purchases done between 23rd June to 30th June, which is 2,40,000, whose delivery has already happened. This particular goods has reached my godown. And remaining 1.6 lakh they have added, mentioning as stock in transit. So my question to all of you, what policy are they following for the stock here? Invoice basis. Delivery of the goods is immaterial here. That is the assumption here. Am I clear? So normally this is the policy that has been adopted. Keeping that in mind, this question has been solved. So when you record your purchases based on invoice, receipt of the goods is immaterial. So 2.4 lakh is proper purchase because invoice also received, delivery also received. So purchase is completed. Whereas for 1.6 lakh, invoice is received, inventory is not received, stock is not received. So it is stock in transit. So this policy is also very much happening in the practical, life. Out when you go for articles, you will see these kind of cases also. People add stock in trade because their policy is to record the purchases upon the receipt of bill. So if any goods is not received, if it is in transit, they will show separately as this is stock in transit. Am I clear? So like that, the first two subdivision of questions we have answered. Do you have any queries at this stage? Please tell me if you have any queries at this stage.
No, sir.
Offline people is clear. People are clear. How about online people?
Clear, sir.
Yes.
Wonderful. Now, third and fourth point are have to be read cumulatively. So please pay full attention. They're telling that sales were 13,60,000 rupees. This is a sale for the entire month of June, or is it is between 23rd June to 30th June? This 13,60,000 is the sale that is happening between 23rd June to 30th June. Who is saying this? The question says that the following transaction is taken place between 23rd to 30th. Okay. So between these days, 13,60,000 worth of goods you had sold, out of which 3,20,000 goods were sent on approval. So we have studied in the sale of goods on return on approval basis concept. If it is casual in nature, if the transactions are casual in nature, even though the goods are sent on approval, at that point of time, you will treat that as sales. You will treat that as sales. So when the goods were sent between this period, can I say that this 3,20,000 rupees had become a part of this 30,60,000 rupees? Because when you sent these goods, you treated it as sales because the nature of transaction was casual. Am I right? So can I split this into two parts? This working is very, very important for the clarity. Total sale 13,60,000 rupees. Please don't do anything, just observe. I'll give time. 13,60,000 is the total sales, out of which the Sogra sales are 3,20,000 rupees. Then what could be the balance sale? 10,40,000 rupees. All right. So out of 13,60,000 rupees, which is the total sales, in that the Sogra sales are 320. So balancing figure, can I say it could be the regular sale? Any doubts here? Okay. 10,40,000 is regular sales. Still that's clear? Okay. Now what they're telling is that half of these goods were returned before 30 June 2020. Half of these goods were returned. Which goods? Sogra goods were returned before 30 June. So 50% return, 50% no intimation. Now listen to me very carefully. When I did the physical verification of the stock on 23rd June, These goods which I sent on SOGRA basis, no, were these goods a part of this 48 lakh? This goods worth 3.2 lakh, which is at the sale price, they must be having some cost price. Okay. So this much worth of goods. My only simple question is, were these goods a part of my inventory on 23rd June? Were they a part of this 48 lakh? The answer is yes or no. Yes, two people are saying yes. Others. This 48 lakh, does it include that the cost of the goods sent on SOGRA basis? Yes.
Yes, sir.
So this 48 lakh 100% has those goods. So when the goods went out, can I say that cost of that much worth of goods I need to minus? So 3,20,000 is what? Sale price. So in the question, the profit on cost is 25%. So profit on sale is how much? 20%. So can I say 3,20,000 minus 20% will give me the cost of the goods sold? That is the cost of the inventory, which is how much? 2,56,000. Can I divide by 2? Because 50%, 50%. 1,28,000. Okay. Now, can I say from this 48 lakh, 2,56,000 worth of goods would have been sent, because after inventory verification, goods were sent. So from this 48 lakh, I'll minus 256. Then they are telling that half of these goods were returned. If the goods were returned, can I say half of the inventory had come back? So plus 28, 128. And remaining half, no intimation. So even as per SOGRA concept, if there is any goods with the customer, if it is lying unsold, those goods are part of our inventory. Therefore, I need to add even the remaining 1,28,000 worth of inventory where no intimation has been received. So can I say, if I do this, the impact is 0. So for this, I will not record any impact. Though the ICAI is done in a different way, but ultimately the answer what they do and what we do is going to match. ICAI have done in a very complicated way. I am trying to simplify this based on the common sense, based on the concept that we have learned. Using that concept, my common sense says that this is the absolute right way of doing it. So from the 48 lakh, when the goods were sent on SOGRA basis, 2,56,000 were its cost, I minused it outward. Then half of that was returned. So half of 2,56,000 is 128. So that I added. So physically 1,28,000 worth of goods have come. But as per your what you called SOGRA concept, the inventory which is still lying with the customer is our inventory. Though the physical position is there, still it is our inventory. So we add even that 120. By that virtue, the impact is 0 here. So I will do no treatment, no addition, no subtraction for this particular part. Am I clear? I have not added or subtracted anything here with regard to this. Am I clear? So here 3,20,000 guys, if I split half, sale price is 160, 160. If I minus 20% profit, 32,000, 30,000 each, I'll get cost of goods sold 128, 128. If I add these both, it will be 256. So are we clear with this part? Are we clear with the SOGRA sales part? Please tell me yes or no. Offline, everyone is clear. Online?
Yes, sir.
Yes, sir.
Now let's discuss about the regular sales. In the regular sales, everything is not normal. Something is abnormal. Out of the balance 10,40,000 worth of sales, there is one particular item of goods costing 240, which had been sold for 120. Costing 240, sold for 120, which means there's something abnormal in that product that you were forced to sell less than the cost price. The cost price is 240, but you're sold for 120. So can I say something abnormal is there with that goods? So here I'm segregating this regular sales into two parts: abnormal item and normal items. Out of 10,40,000 rupees, how much should I minus? 120 sale. If I minus, can I say the balance 920 will be the regular sale normal item? This is the next balancing figure. Do you agree with me? 10,40,000 is total sales. In that, abnormal sale were 120. So obviously the normal sale will be balance 920. Now, here also they're telling that cost plus 25%. Profit is cost plus 25%. So profit on cost is 25%. Profit on sale is 20%. So here for normal item, 920 sale is given. From that, if I minus 20%, Can I say I'll get 7,36,000 as my cost price? On 920, if you multiply 20%, you'll get 184 profit. So from that 920, if you minus 184, you'll get what? Cost of goods sold, which is 736. Am I correct? So cost of goods sold for the normal item is 736. Is that okay? Everyone, hello?
Yes.
Let me change the color. Yes. The cost of the goods sold normal item is 736. How did we get 920 minus 20% is 736? The cost of goods sold for abnormal item is 240, very clearly given in question. 240 is clearly given in question. So both of these are, can I say, cost of the goods sold, normal, abnormal item put together. Now, when I did the physical verification on 23rd June, this 48 lakh worth of goods, what has happened? The 48 lakh is the total inventory on 23rd June. After that, the goods were sent, goods went out. So can I say the goods that went out, the goods that were sent out between this period, I need to minus. So this 48 lakh inventory, what I've taken on 23rd June, this 48 lakh includes the cost of goods that were sold. Basically, if you add these both, 240 and 736, can you please tell me the total? 9 lakh 76,000, which means 9 lakh 70,000 worth of stock were there in this 48 lakh when I did the physical verification. Because only after physical verification, on this cost, I added profit, I loaded profit, and I sold the goods. So technically, from this 48 lakh, should you minus this outward sale or not? We have to minus outwards. How much is outward? You have to minus 976. That's what we have done here. Less goods that went out in between the period 23rd June to 30th June was 9,76,000, which is at the cost price. So the first three items added, the fourth item is subtracted. Please tell me, are you getting this value 44,64,000? Yes or no? Please tell me, are you getting this answer 44,64,000? Yes or no? Which is the value of the closing stock on 30th June. This is the book value of the closing stock, not the physical value. Because this 44,64,000 includes certain goods, which is not there in my godown. So in this question, they have not asked the physical stock. They've asked the book value of the stock. So as long as your third and fourth point is concerned, there is no, what you call extreme assumption that is being taken. It is a normal thing. Third and fourth point is normal thing. Where people go wrong is in the first 2 points. Am I clear? The first 2 points. So the answer in your ICAI study material is how much? 44,64,000. Now this they have done in very complicated way. I can explain this, though I've understood this, but when I start explaining this, my worry is that what you've understood now, everything will become khichdi there. So I'm not even making an attempt to explain this. I hope my concepts, my explanations are quite clear. Now the problem here that you may face is that the presentation of this particular answer and versus what is given in the ICAI study material is different. So one fear that might pop up into your mind is that, sir, what if they're expecting that answer? And if you do this answer, then what will happen? One thing is that you have to pray God that they accept this presentation. Second is that you may, just make a note of this point. Like whatever assumptions you have taken at respective stage, you can state your assumptions and make a note of this point in addition. What I've mentioned is goods that were sent on SOGRA basis. Now, this explanation is with regard to the last point, because the last point is what they've done in a different way. If you look at your ICAI answer, there is no problem with the first three things. 240 they've added, 240 we've added. 240 they've added, we've added. 160 they've added, we have added. So here there is no problem in the presentation with us and the ICAI. The problem completely lies in this part, that sale wala part. So for that, this note, could help you. Goods that were sent on SOGRA basis, both return goods and those goods lying with the customer have to be included in the value of inventory as on 30th June. as per the rules. As per the concept that we studied in the Sogra chapter, the goods that were sent on Sogra basis, the goods both that were returned and the goods which is lying with the customer, both these goods 128, 128 has to be included in the value of the inventory. So this they get a clarity that addition needs to be done. However, the cost of goods sold of the above goods are already present in the value of the inventory taken on 23rd June. However, the cost of goods sold of the above goods means Sogra goods, that is 2,36,000 worth of goods, are already present in the value of inventory. And that from that inventory 48 lakh, in that 48 lakh, 2,36,000 Sogra cost is already there. When these were sent, you never subtract it. So while bringing them back, adding does not make any sense, is what this point is trying to explain. The cost of goods sold of the Sogra goods are already present in the value of the inventory taken on 23rd June. Therefore, there is no need to add the cost of goods sold 2,36,000 to the value of inventory again as on 30th June. So this explanation in your language you can try. What I'm trying to tell is that this 2,36,000 worth of goods that went out, sorry, 2,56,000 worth of goods that went out, this is already included in that 48 lakh. So from the 48 lakh, we never subtracted 256. So why do you want to add it back again unnecessarily? So that is what the explanation is given. So this one point you can mention. Also, you can state the assumptions for the first 2 points. That is, here the goods were sent on consignment. You can assume that these goods were sent before 23rd June physical verification of inventory. Like that you can assume. And state your answers. So you can state your assumptions here. You can also state your assumptions here. Right? So wherever you feel that you are feeling confused, slightly tricky, it is always better to state your assumption and do it. And I hope the person who is correcting the paper will have the understanding to apply that particular assumption and check your conceptual clarity rather than strictly relying upon the key answers. That is what we expect. Because at the CA level, we professionally expect that people test our concept rather than mechanically following these kinds of questions. But on the other hand, I would still say if you get a similar kind of question, like same structure, sometimes I say so it so happens that you get the same question and the only number is different, then I would ask you to stick on to these assumptions. If the same question comes with a different value, let's suppose, kindly stick on to the same assumptions. Otherwise, in all the other questions, the way we have logically understood now, you understand in that way, no problem. But this question alone, slightly unique now. If this kind of thing comes, be very careful that you take these kind of assumptions. Am I clear? Anybody's got any doubts with this? Yeah, of course. This working note I've shared with all of you. And no, I've updated this, in fact, and I'll be sharing with all of you. So you'll have it with you, don't worry. You can make a note, but still you'll have this as a soft copy. It's not a problem. Yeah, absolutely can show this working. There's no hard and fast rule that the working note has to be only in this way or this format. Whichever way you can present, which is easy for the opposite person to understand. Why not? Why not? Fine. This anyways, the soft copy is there with all of you, so you don't have to panic. Also, you will be getting the hard copy. I'll just give you the hard copy within a day or two, so should not be a problem. Yeah. I mean, I'll start giving for few, then we'll follow with the other one. Right? Online people, are you all comfortable with this part?
Yes, sir.
I'll be uploading this video anyways on YouTube because I think a lot of students all over India, they have a problem with this particular question. So I'll upload it anyways. So I think Sanjay, you have joined in late. So the starting part is the main thing here. So you can watch it again. So you'll be comfortable. Not a problem.
Okay, sir.
Right. So Ashwin, Chavi, Kavi, Sanjay, clear online?
Yes, sir.
Fantastic. Offline people, all of you clear? Comfortable, no? Chalo. So guys, with this we complete the valuation of inventory topic. So yes, that's all from my end for this particular chapter. I'll see you all in the next new chapter. Until then, bye bye. See you. Take care.
Thank you, sir.